It's really happened now. The Chinese central bank is injecting 1 trillion yuan into the economy in a historic move. We can see it here. Massive liquidity is now flowing from China into the market. In dollars, that's 139 billion. And it almost pains me to say, with these incredible developments happening in the background, we have a positive trend here. But there's so much wild stuff going on. We have Saylor, who is now announcing new acquisitions, which we are also looking at. New statements, Bill Miller, billionaires who are now speaking out here for Saylor. We have a new report here that all the major financial players are now shorting the dollar. Whether it's Deutsche Bank, Goldman Sachs, Morgan Stanley, or JP Morgan. It's just incredible that the dollar is losing more and more trust. And we'll take a look at which important events are coming up for us next week, because it could be a really crazy week, just like the past few weeks. Honestly, in the last few weeks, there hasn't been a single week that wasn't crazy, and it could easily keep going like this. Get ready for massive volatility. But before we dive right in, hit the like button below so Bitcoin can really take off. We need more attention here right now. I just checked again earlier. Google search queries are still totally at rock bottom. These videos need to reach even more people. So I just need a second of your time. Like the video below and subscribe if you haven't already. But first, let's take a look at Saylor, who's sharing his chart again. Send more orange, so send us more orange here. We want even more orange, more orange. He's not giving any hints this time. The last few times, he always gave some kind of clues about how the purchases might take place. Now we don't know how it's going to happen. It could be that this time they're focusing on ATMs again, meaning stock dilution. In my opinion, it would be better if Saylor tried more and more to shift capital to the equity side, so to raise capital there. The last call was a bit smaller. But for that one, they didn't do any ATM, meaning no stock dilution, but instead raised money using the Strike and Stripe options. Stripe was also pretty well received. So, as I said, in my opinion, it would be a very, very healthy development if things moved away from ATM and more toward the equity side again. But we'll see tomorrow how much he bought. If you already have a tip or a guess about exactly how he bought, feel free to write it in the comments below. We'll also check out a statement from Bill Miller later, who sums up really well what's currently going on with MicroStrategy. Here we have star investors, billionaires, who are now of course supporting Saylor, even though on the other hand, you also hear a lot of criticism. Then we have Hedge here, who just posted something really explosive. He says that the favorite trades of all the big financial institutions are now shorting the dollar. Goldman is shorting the dollar. Morgan Stanley is shorting the dollar. Deutsche Bank is shorting the dollar. JP Morgan is shorting the dollar. What does that mean? They all no longer trust the system. They're all questioning the system. They all want potential alternatives. Maybe you could even add BlackRock to that list. I don't know if BlackRock can officially be considered short on the dollar here, but if they're betting on Bitcoin and so on, and they're already saying in their papers, hey, the dollar needs to be questioned, inflation and so on, then BlackRock would probably be the next player on the list. But of course, BlackRock isn't a bank. I just realized these are all banks here. So it's probably just about banks here. And that's how a global reserve currency slowly fades away. The loss of trust won't happen overnight. But gradually, more and more banks, more and more players, and so on, are looking for alternatives. And the weaker the dollar is here, the stronger Bitcoin can be. We'll get to China in a moment, to the stimulus packages, which also completely play into our hands here. But first, let's take a look at what's coming up for us next week, because there could really be a bit more volatility. On Monday, we have Atlanta Fed GDP data. The Atlanta Fed has often been very, very bearish, sometimes reporting much worse numbers than other central banks here in the US. So, there are several central banks in the US. And then on Wednesday, we have CP inflation and the 10-year note auction. That's also really, really interesting. So first, inflation data. Of course, that's interesting. Okay, so can we potentially lower or raise interest rates here? These are always the important data points that the central bank uses to make decisions. Donald Trump said, hey, inflation is down, finally lower the interest rates. By the way, I just made a video about this recently, and I need to correct myself. In that interview, Donald Trump said I understood it as making the so that he would lower the interest rates to 0.25%. But if you listen very closely, and thankfully, people corrected this in the comments, he actually said, we'll lower the interest rates by 1 or 2 points, and not by 0.2 or, 0.2. I think he said 0.2, but I understood it as 0.2, meaning down to 0.2. But what he actually said was 1 or 2 points. So he was just kind of mumbling to himself there. I mean, I'm sorry about that. Some people commented below saying, yeah, that wasn't correct. Yeah, definitely not correct. But I also said it would be a historic rate cut. There's never been such a drastic rate cut before. And that would still be the case, because he would have lowered the interest rate from 4.5% all the way down to 0.25 or 0.2%, but he'd just lower it by 1 or 2 percentage points, so down to 3.5 or 2.5. And if we go down to 2.5, that's still a historic rate cut. That's why I didn't really correct anything anymore, or, well, I only corrected it just now. Otherwise, I usually would have written a comment or something underneath, but everyone had already commented on it anyway. And then that comment was already at the top with the most likes. So I thought, okay, it doesn't make sense anymore for me to add another comment. So if inflation here continues to decline, that would be a good indicator that interest rates will be lowered. But what Trump is demanding here, in my opinion, is unrealistic. That's not going to happen. And then we have the 10-year note action. And we just recently had a bond auction that didn't really go well. And that's also a really big sign. Something a lot of people have always pointed out. Hey, if these auctions stop working properly, then the Fed has to step in. And we've seen time and again now that there have been problems there. I'm not a bond market specialist, but yeah, it's definitely a big deal when the US issues government bonds and nobody buys them. There are no buyers, or there are just certain problems. Then on Thursday, we have the PPI inflation data, and this is also the last week with inflation data before the Fed meeting takes place in June. So that's why the inflation data is really critical here, because it's basically used as an indicator for what the Fed is going to do. So it doesn't look like they're going to cut rates by a whole percentage point, or two like Donald Trump suggested, but at most by 0.25 percentage points. And even that is very questionable and probably won't happen. Here, I've pulled up the FedWatch tool. You can see there are still 10 days left until the potential rate cuts. If we look at the market's expectations here, only 2.6% are currently pricing in a rate cut, and 97.4% expect no rate cut. So it's exactly the opposite of what Donald Trump wants, demands, or says. So in the US, the money taps haven't been fully opened yet. But here in China, it now looks as if the money taps are fully open. We're seeing massive liquidity being pumped into the market here. And China already has some really serious problems with deflation. They want to stimulate the economy. They want to get it under control somehow, but they're not really succeeding. And now we see that on Friday, China's central bank pumped 1 trillion yuan, about 139 billion US dollars, into the markets through so-called reverse repos, which points to strong support for economic growth and a clear monetary policy. So, in terms of monetary policy, that basically means the money printer is going BRRR. And you really have to understand what's happening here, because this is absolutely essential. So, for those of you who might not be totally familiar with this, some of you have probably heard of reverse repos. But yeah, it's not exactly trivial to understand, although it can actually be explained pretty simply. It's a geopolitical tool where the central bank provides short-term liquidity. In doing so, it buys securities from commercial banks with the promise to sell them back in the near future. This way, the banks get fresh cash immediately, but they have to pay it back soon. So, it's mainly intended for short-term transactions. And if the reverse repo market, for example, collapses, I think that almost happened in 2019, or was it 2018, something like that, then there's a massive problem. But in this case, it's not the reverse repo market that's collapsing. Instead, money is flowing into the economy through the reverse repo market. And that means the Chinese central bank is trying to stimulate the economy with this measure, to encourage things like consumption, investment, or lending. When a central bank injects so much money into the market, it's often a sign that the economy is weak or that they want to prevent a recession. And yes, the economy is weak here in China, and China wants to basically reverse these deflationary trends. And of course, this is relevant for Bitcoin simply because it means that commodities, stocks, and even Bitcoin are likely to rise here. But as I said, this money doesn't just instantly somehow show up directly in asset markets. It naturally takes some time before it gets there. But with a delay of a few months and so on, a large portion or significant parts of this money do end up in assets. And that's exactly what we're seeing right now. Everywhere, the money taps are wide open. The ECB is slashing interest rates like crazy. The Swiss National Bank, here in China, they're all trying every possible way to stimulate the markets. The only exception is the Fed, which is still a bit of a holdout, still being a little cautious. But globally, the money supply is already increasing. And even if we simply look at the money supply charts, Bitcoin actually tends to be on a rising slope rather than a downward slope if we simply look at the global money supply. I always say, look at the global money supply. That's probably the one indicator that has the biggest influence on the markets. And now let's check out a statement from billionaire and top investor Bill Miller, who's been a strong supporter of Bitcoin for a long time, but is now also backing MicroStrategy. I know, there are always all these articles about it. Just yesterday, I read yet another article about it. Yeah, MicroStrategy is supposedly going to go bankrupt. But if you really take a closer look, MicroStrategy actually doesn't have such a high debt ratio. In fact, their real problem is that they're actually underleveraged for a Bitcoin treasury company. Other treasury companies are way more in debt compared to their equity, in relation to their liabilities. But check out what Bill Miller has to say about this. And it's just crazy that we're seeing more and more billionaires backing not just Bitcoin, but now also MicroStrategy.
Strategy. I'm going to mention one of Samantha's favorite names, but she won't mention it because she's too embarrassed, which is MicroStrategy. It's Bitcoin on steroids. It's outperformed NVIDIA since they adopted their the treasury strategy. There's so many companies now that are adopting a similar strategy. And I think that, if you look at it from a pure technical standpoint, it's got one of the best technical charts in the business. And it was 500, now it's 317.
So you really have to check this out. There's a billionaire sitting there, Not just someone throwing $10 into Bitcoin, but an actual billionaire, wearing a Bitcoin cap in a Bitcoin interview, saying that MicroStrategy is Bitcoin on steroids, and that just shows the incredible potential of MicroStrategy. I'm not saying you should just believe every millionaire, billionaire or anything like that, but you really have to see that for yourself. You have billionaires putting on Bitcoin merch, being massive Bitcoin bulls, total fanboys of Bitcoin and MicroStrategy, and at the same time, there are still people like Peter, who orders food on credit from Lieferando every day and asks at the bakery, for the tip, if he can pay with Klarna, always has the latest iPhone, of course financed over 48 installments, and collects payback points as if it were an investment strategy. I mean, no hate against payback, you can do that if you want. Some people have even said that Satsback is actually even cooler, since you get Bitcoin back directly. But of course, that's not really an investment strategy. And then Peter is also investing in Shiba Inu at the same time, because it's cheaper than Bitcoin, all under the premise of, yeah, I just have to wait for the right dip. Bitcoin hasn't dipped enough yet. At 30,000 it was too expensive, at 60,000 too volatile, and at 100,000, well, now it's too late anyway. I still have to wait for the dip here, and at the same time, people are doing all these absurd things. And then you end up waiting for some tips from financial influencers who, just yesterday, were selling you some fashion brands, shoes, perfumes, or dietary supplements. You end up taking advice from those kinds of influencers and ideally, even by something like Beercoin, because it's cheaper and supposedly has so much long-term potential. And then there are people in the background getting paid, influencers who are getting paid, trying to convince the people watching this nonsense why. I don't know, the next hype coin is supposedly so amazing. You really need to be extremely careful about that. There were some discussions about this again recently. I won't name any names, but people on X were once again sharing some weird coins. And you need to know, I don't get any money for this. The Bitcoin Foundation doesn't send me any money. It's not like I'm getting paid to shill Bitcoin here. I mean, Bitcoin doesn't have a marketing company. But all those finance influencers who were selling you fashion just yesterday or some kind of energy drinks, sugar-free energy drinks, claiming they're healthy, they get huge amounts of money from those companies. And you really need to understand what that means, what the difference is here. Do your own research, don't just believe me, question everything. The media, your thoughts, your beliefs, your family, your history. Just question everything, and you'll get closer and closer to the truth, and that's Bitcoin, not some kind of gambling casino or anything like that. So guys, let me know in the comments below what you think about what's going on right now, how you see things. And if you still want to buy Bitcoin, I'll put a link below to 21 Bitcoin. With the code BITCOINODL, you can get up to 20% off fees when buying Bitcoin, and there's an annual commission. So that's also a way you can support the channel. That's how I finance this channel. You don't have to, you can buy elsewhere, but it's a big recommendation from me. I always recommend it to a lot of people. See you guys. Bye. Peace.